Welcome to the Iowa Economy Podcast. I'm your host, Chris Conetzkey, president of BPC and publisher of The Business Record. The Iowa Economy Podcast is your place to get the economic insights you need to help your business stay ahead of Iowa's economic curve. With us today is Peter Orazem. He's the interim chair of the Iowa State University Department of Economics. He's got decades of experience following the Iowa economy. He's been a frequent guest on Business Record panels, virtual events. He's participated in our annual economic forecast luncheon as well. We're really lucky to have him. Welcome, Peter.
Well, thanks so much for having me.
Well, we're going to put you right into the seat to start off. All you have to do is explain the economy in 3 minutes to us. I've asked him to bring us up to speed on what has been happening. He's going to give us 3 insights in 3 minutes or so. Then we'll ask him some follow-up questions and get a little bit of insight of where we're currently standing in the economy. So, Peter, you're up.
I know when you gave me this question, I immediately wrote down 8 things. So there are a lot of...
That is actually part of the challenge, I think, right now is there are a lot of things happening at the moment. So let's see what your top 3 are.
Well, it's hard not to start off with the government shutdown. We've just finished our first month. We're going into our second month, and the real economic implications of that are about to hit. Federal government employees are about 2% of total employment here. But not only that, but they're responsible for a lot of the infrastructure that we rely on. So we're already hearing about issues in terms of air traffic control, but you're going to have everything from not being able to get food safety regulators on board for meat packing to any number of things that are going to disrupt the smooth functioning of the private sector of the economy. And what's odd is that's sitting on top of the fact that we're running about a $1.8 trillion deficit, which is about 6% of GDP, which is not sustainable. So we have this unusual combination of a shutdown government on top of massive federal spending that is, I think, a long-term threat to the viability of our private sector. The second one is that if you remember Bob Shiller, who won the Nobel Prize, among other things, for pointing out that price-earnings ratios matter, the current price-earnings ratios for the S&P 500 are back to where they were right before the dot-com crash in 2000. So that ought to make you scratch your head a little bit as to where we are headed in terms of what looks to be a very overinflated stock market. And the last one is just the overall issue revolving tariffs and uncertainty about where tariffs are going to go. So even if we think that, in some sense, we're not back to what was threatened back in February or March, average tariff rates are at 17%, whereas a year ago they were at 2.4%. So certainly the cost of bringing in goods from abroad, the global supply chain, all of that is going to be disrupted, and that appears to be continuously disrupted going forward. And a lot of the issues related to tariffs, I think, have yet to be realized.
Well, you did a great job. You kept it under the 3 minutes as well. So I think we've solved the economy. Nice job.
I can talk fast. I was a debater in high school. So,
well, I want to start with the government shutdown. You mentioned 2% of the workforce here in Iowa. I believe is what you said.
It's actually a little higher in Iowa.
A little higher, okay.
Well, actually, I should say, okay, let's call it 2%.
Okay.
It's been a source of employment growth actually in Iowa, but.
So with that, and not just the employment part, but I imagine there's lag effects of a government shutdown. Where and when would you start to see some of that from an economic data standpoint, which I also understand is a challenge because data itself is is hard to come by at the moment. So
yeah, we can make it up and we'll find out if we're right down the road. I do think that one of the things that hasn't happened yet is the shutdown hasn't affected the Department of Transportation, and that's an issue in Iowa because we rely on surface transportation for a good chunk of our transportation and warehousing business. And because they are paid for by gasoline taxes rather than other sources of revenue, they're actually still in business, even as other areas of the government have been shut down. But there are things that you don't think about. So, for example, here on campus, we have federal labs, and some of that has been disabled. So we have research that is being disrupted, but we have the National Animal Disease Lab here in Ames, and some of those functions have also been disabled. And so they have people who are now, for example, studying avian flu who are not being paid. Well, how long is that going to continue? So you're relying on a lot of people who have to do their job because they're considered mission critical that the government is not paying. And at some point, I think the wheels are going to come off that enterprise.
I would imagine. I don't have a lot of good context for examples in the past of government shutdowns. Do you have some context on the length of time that we're at currently versus some historics?
Well, the last longest government shutdown was in 2019, and this one is the second longest ever. And I think within 2 weeks or so, I think we will be at the longest ever. So I think um, after about a month, a lot of the things start to, the chickens come home to roost. So, for example, SNAP benefits were just discontinued, I think, as of Saturday. And so some of the transfer payments that are considered part of the expected government support for the poor, those things are now being discontinued. And so I think a lot of the pain from the government shutdown is really starting from this week on.
What kind of ripple effects do you think a shutdown of this length has longer term?
Well, I mean, if you're a government contractor, a subcontractor, and you're anticipating that your business is going to be going forward, you actually lose that business over this period of time. We don't have a lot of that activity here in Iowa. So if you were in Virginia or Maryland or in the Washington, D.C., I mean, that would be a major issue because you're not going to get that money back. Um, but if you're relying on the federal government for just security reasons, you're going to be flying to New York. All of those activities are being at least slowed, if not curtailed.
Is there from an employment standpoint? I imagine at some point folks are going to need a paycheck, right? Is there a chance that at some point federal workers are going to be looking for other jobs, other types of things like that?
Well, we have 6 openings in the Department of Economics. So if you know any USDA employees, please ask them. Ironically, we can't email them because their federal USDA emails have been discontinued and it's illegal for them to access them. So even some of the sorts of things that you would think, okay, I want to get information from the federal government, that information is not there. You can sort of view the USDA, for example, as sort of the democratization of information, right? So if you're Cargill, you have a pretty good idea of what the harvest is going to be and what prices ought to be. But if you're a farmer in the middle of Iowa, you don't have access to that same research support. And you rely on the USDA to tell you, okay, here's where the harvest is coming in. Here is where we're seeing opportunities perhaps for trying to sell some of your product forward or using futures and options to diversify risk. All of that is discontinued. And so the information that we have going into the harvest season, we're just flying blind. We have the last information we have is from a couple months ago.
Which I imagine leads to the uncertainty question, right? I mean, if you're not sure, if you're not sure when the government's reopening and you're not sure what that looks like, it's just one extra factor in the 8 or so that you said you would have presented today too. So I imagine that uncertainty is just underpinning a lot of this, right?
If you think that, for example, uncertainty about future trade agreements with some of our major players. For example, if you think that, well, our soybean sales to China are going to resume now or not? Well, that's going to have a massive effect on what prices domestically are going to be for soybeans. And just the uncertainty by itself means that it's harder for you to make those plans, which means that depresses the current price of soybeans simply because the uncertainty makes it less easy for people to make positions either to buy or sell that crop.
The state's GDP for Iowa hasn't, and you'll have to help me with the actual numbers on it, but I know it's not been doing as well as some of our neighboring areas. I imagine, what kind of effect does a government shutdown ultimately have on GDP? And I'm not sure that I understand the relation there, and I'm not sure that there's good information on that. So,
well, I think it'll affect other states. I think the states immediately around DC are the ones that are affected most heavily. Iowa is probably not that much differentially affected compared to a lot of our neighboring states, although I think Illinois is affected somewhat more simply because they have a very large city, and large cities have more um, federal relationships than we would have here in Iowa. Uh, but I think the bigger issue is simply that, okay, what sorts of things are being disrupted? Well, there was some discussion of perhaps having a federal transfer payment program to try to help farmers who were disadvantaged by the current trade policies. Well, that's shut down now. And so if that's going to happen, it can't happen as long as there's nobody there to actually process the payments.
well, you mentioned tariffs in your opening comments, and obviously that's been a huge discussion point here. One of the things I'm struggling a little bit with is understanding where the timing, where we might start to see the effects of that in some ways, and what the timing would look like around that. I know that when I've talked with other folks, there is some lag there, and I'm just curious again. Last time we navigated inflation, it was because of the sudden shock of COVID and shutting down things. This is also sudden in some ways, but also with a prolonged runway. So I'm just curious how to look at this one.
Well, certainly, I mean, some of the effects of tariffs are already in place because Iowa, a big chunk, a fairly large chunk of our economy is related to transshipment of product from east to west to north to south related to the North American Free Trade Agreement. And we've been having on again, off again hissy fits with our neighbors to the north and south. And that's not good for business. And it's certainly not good for business involved with transshipping product from east to west and north to south. If you're John Deere and the cost of aluminum and steel has gone up precipitously in the last 8 months, your input prices are rising at the same time that the demand for your product is falling. A lot of our manufacturing in Iowa is not geared towards selling just in Iowa. It's geared towards selling nationally and internationally. And it's that latter part that has had consequences then for the bottom line at John Deere, which has had consequences for employment in manufacturing, not just at John Deere, but at other agricultural implement manufacturers here in the state.
And Peter, I'm going to move into our next segment, Ask an Economist. We thanks for getting us caught up with what is happening. And there's a couple things that you mentioned that have been happening that I'm going to spin the lens to on the future also. But we're not the only ones that get to ask good questions. Our audience often has really great questions, and some of the best ones come from business leaders who are most affected by the economy. So this is part of a segment that we're doing called Ask an Economist. And I've got a great question here from Deidre DeGier. She's the president and CEO of the Oak Ridge neighborhood. She said Iowa is set to experience a significant drop in revenues in 25 and 26. How do you think this reduction in revenue might impact state services and Iowa's long-term fiscal stability? I wonder if you could provide us a little bit of insight as we look ahead at state budgeting.
Well, the state has been engaged with a series of annual cuts to income tax rates with the idea of flattening the income tax rates in Iowa and lowering the average rate. And there's also an effort in place to try to reduce property tax rates, which are relatively high in Iowa compared to most states, including many of our neighboring states. And that obviously is going to have some impact on revenues. But the federal One Big Beautiful Bill Act also had implications for income tax liabilities at the federal level. And because Iowa has rolling conformity with the federal income tax rate, that also lowers tax liability here in the state. So immediately, the state revenue forecasting committee, which had been projecting a 4.8% shortfall in income in tax revenues, it's now at 9% or $1.3 billion. And the state has money saved up that can handle that for a year or two, but it can't handle that for indefinitely. So I would see that there's going to be a slowing of efforts and perhaps even a reversal of some of the efforts to reduce income tax rates in the state.
I imagine the discussion we just had about tariffs, that's got to have an effect on state revenues in some fashion. Do you, because it is so unprecedented, I imagine there's got to be a little bit of a degree of uncertainty about what that actual effect will be. So when you're the confidence in projecting what state revenues will look like, it's got to be harder today than it would have been 2 years ago.
Right. I mean, Iowa has not exactly been doing well compared to the rest of the U.S. So you can sort of look at the period before and after 2018. Iowa basically tracked the rest of the United States in economic growth before 2018. Since then, we have really been lagging in our economic growth relative to the U.S. And that's partially related to the pandemic and its implications for the retirement decisions of older workers. And Iowa had a relatively old labor force. And so if you look at 2021, 2022, 2023, 2024, Iowa actually shrank each of the last 3 years, not by much, by 1/10 of a percentage point on average. And we started the first quarter this year in a negative range, but we actually had a pretty robust second quarter. And so then the question is the second quarter the forecast as to what's happening going forward? Or is it the first quarter? And, I think the first quarter has more weight to my mind.
What do you think would have been behind the second quarter?
In part, the drop off in the first quarter was a bunch of people went and bought internationally because they anticipated tariffs rising. And in getting those things in, if you look at how we measure a gross domestic product, it's exports minus imports. So if you jack up imports, it lowers overall economic growth. And so you ended up with an artificial decline in the first quarter, not just at the federal level, but across most of the states in the United States. And the second quarter, well, now you no longer need those imports. And so we didn't import as much. And so we had an artificial inflation of growth in the second quarter. And God knows when we'll find out what's happening in the third quarter.
Well, why don't we go ahead and we'll keep spinning it towards the future a little bit here. So ask you to take a look at one issue, and I'm sure you probably got more than one, but one that you think business leaders here in the state should be watching in the future.
Well, I think that the long-term reason why Iowa has been growing more slowly than the rest of the U.S. is related to our labor force and our relatively old labor force. It's not that the people in Iowa don't have high labor force participation rates relative to the rest of the U.S. It's that labor force participation rate fell more in Iowa than the rest of the U.S. And that was in large part a result of people who decided to cash in on their 401ks. We had rather robust growth coming out of the pandemic, and they retired. So Florida's old, but everybody who's old in Florida was not working. Those were the retired Iowans who moved to Florida. And so Florida, actually, their labor force was relatively young. And so if you look at the parts of the U.S. that have really come out of the pandemic gangbusters, it's the youngest states in the United States, which includes Utah, Idaho, Texas, Florida.
What about specifically about youth leads to better economics?
Well, number one, they have to work, right?
Yeah, got it.
We indebted them
Mhm.
with their college degrees, and now they have to pay it back.
Got it.
But that's the bigger reason, is that labor force participation rates for people before age 55 are much higher than they are for people after 55. But interestingly, in Iowa, the labor force participation rates for young Iowans actually increased post-pandemic. It's just that the drop-off of older Iowans was larger than the increase for our younger workers.
And now this, you're not necessarily in the business of saying exactly what people should do necessarily with the data, but are there some solutions out there that you have seen or that you would think about if you're trying to increase the workforce, the quantity of the workforce ultimately?
Well, I do think that we have a very good university system here, and we would like to retain those workers here in the state. And one of the ways to retain those workers is to continue to employ international students who are here in the state. And Iowa's disadvantaged with the current H-1B visa program because it's based at the individual firm level, and we just don't have these mega large companies that basically suck up all of the H-1B visas up to the quota levels. And we don't, it seems to me that we ought to be pushing for a way of making the H-1B visa accessible at the state level. And you don't know where they're going to work, but you would like to at least reserve some of that STEM trained workforce here in the state, rather than shipping them all to the coast, who have been the big winners from the past immigration policies in the United States.
One of the things that when I first started doing the economic forecast and as editor for Business Record, there was just so much time and energy being spent at that time coming out of the Great Recession on incentivizing workforce specifically and incentivizing hiring. Have you seen, or is there any strategy around the individual, not necessarily the company standpoint, from a retention standpoint as a state?
Well, I mean, early on in the pandemic, Iowa led the nation in quit rates, and that was because we had such a dearth of people to fill slots that people were simply quitting one job and looking for the next opportunity. And the number of vacancies in Iowa was very high relative to the number of people looking for work. That has abated somewhat, primarily because of a slowdown in the number of new vacancies. But we still have more vacancies than we have people looking for work here in Iowa. And so our unemployment rate is extremely low, even though our economic growth is extremely low. And so I think that we can still use a lot more people in Iowa. And I think that you see some of the companies that are still looking for workers thinking about other places that they might want to locate where they have a more robust labor supply.
Mm-hmm. As you kind of keep looking out, this is always kind of a tough question, but if you try to push the lens out about a year and just say, what do you think the economic environment might be looking like at that point? What are some things that, I'm not going to make you predict exactly what's happening, but what are some things you think we might be working through at that point?
Well, I am hoping that some of the promised trade negotiations are going to actually happen. And so we're going to start seeing a relaxation of these very high tariff rates. For the state of Iowa, our manufacturing and agricultural sectors depend critically on international markets. And so we are really exposed in those two areas to trade restrictions. And so I'm hopeful that some of the very high tariff rates, as I mentioned, average at 17%, that's going to be working its way back toward lower, say, free trade type levels, and that we've reestablished trade negotiations or trade relationships with both Mexico and Canada, because those are our biggest markets. So from Iowa's perspective, I think we could not do better than to have a movement toward freer trade. And I think we're going to have to, because I think at some point you're going to start seeing uh, uh, increased weakness in manufacturing, not just here in Iowa, but nationally.
Yeah, I was going to say, what? Let's imagine that doesn't happen for a second. What starts to break, or where do you start to see the effects of that if it's prolonged with no deal in place?
Well, the purpose of the tariffs presumably was to strengthen manufacturing. Ironically, its short-term effect was to weaken manufacturing because it increased input prices at the same time that it led to retaliatory tariffs from other countries that made Iowa and U.S. manufactured products more expensive. And so I, I, it's I don't think that it would be a good thing to do this one more time, right? I mean, I think one of your questions was what does the current economic climate seem like? And it's hard not to think back, did we last have 17% average tariff rates? And it was the Smoot-Hawley tariffs of the early 1930s, and that did not go well.
It's probably never good when we're looking back at precedent from 90 something years ago. So,
Well, I mean, the Great Depression had a lot of other things going on besides just trade restrictions, but the trade restrictions didn't help.
if it is in a prolonged environment, where do you start to see the ripple effects, you think, in the economy ultimately from that? You mentioned manufacturing as being on the front end of that, but where else do you think that would translate out to?
Well, I mean, there are other signals in the economy that are actually quite good, right? I
Mm-hmm.
mean, if the stock market, if it should be a forward-looking indicator of the economy. And from the stock market and current price earnings ratios, you would think that we had 2% interest rates and rapid growth. But in fact, projected growth is relatively modest, and the restrictions on international trade are going to give additional downward pressure on growth. So I really think we're going to have a mediocre growth, economic growth, and that's just going to compound the cost of having a massively large federal government. Because one of the ways to make the federal government less invasive is to grow fast enough that you can pay for large deficits. But in fact, if we're growing more slowly, that's going to make those deficits more expensive. So currently, the federal government is about 23% of GDP. The long-term average was 21%. After the Great Recession, we returned to 21% after peaking at 24% within 3 or 4 years. Now the projected federal chunk out of the rest of the economy is projected to be no less than 23% going forward, and that's basically taking 2 percentage points out of private sector. And if it continues to grow, then that's an increasingly large burden that the rest of the economy is going to have to share.
As we get kind of close to wrapping up here, you mentioned some of the bright spots. So we've been talking about a lot of the challenges and issues, but what are maybe some of the bright spots that, if you were optimistic about things in the economy, that you'd be looking at?
Well, there's always next year. Right now, I mean, are we going to keep the government shut down forever? Well, let's hope not, right? As I said, I think there's going to be downward pressure on tariff rates, so I think that's going to be good. I think that there's some realization that we cannot continue spending our way out of um, a relatively strong economy. And so transfer payments and some of these sorts of things may lead to reforms of, say, health insurance or pension reforms that are going to reduce the burden of retirement and health expenses on the rest of the economy. I think all of those things are likely to happen. And I do think that you're going to start seeing relaxation on some of the anti-immigration sentiment in the United States, particularly geared toward attracting and retaining highly trained rather than, say, less trained foreign-born workers. And because 38% of the population and growth in Iowa in this century has been from immigration, I think that's a positive for Iowa. So I think all of those trends mean that while the short term looks relatively dire, I think longer term we're going to see a lot of policies that are actually going to reverse that trend in Iowa.
All right, I'll let you off the hook here in just in a moment, but one question. You do a great job talking about economics and making it something that people can digest. But there's a lot of noise out there and a lot of reports and economic data. I'm just curious, do you have a pet peeve when you see either media or other people talking about the economy that you go, hey, don't focus on that. That's not really what you should be looking at, something that people spend a lot of time looking at?
Well, I'm talking to the media right now, and I'd be somewhat rude to say that you guys weren't doing a good job. But I do think that there's a lot more data, not from the federal government now, but there's a lot more data, and we are an information-driven economy, and the challenge is figuring out how to take out the noise and respond to the signals. And I think in general, companies like yours do a really good job of trying to make sense as to what's going on, and then broadcasting that information to people who have an interest and a livelihood that depends on trying to figure out where opportunities are going to exist, not just in Des Moines, Central Iowa, but in the Midwest as a whole. So I appreciate that. And then it's always nice although it's a bad signal for the economy when people are calling up economics professors and asking their opinion, I think that's a sure sign of recession.
We got, maybe there'll be a new indicator that we can get number of phone calls to Peter's desk.
I had 8 different reporters call me last week, and I went, oh, time to sell.
Yeah, that's not great. So hopefully that's not the big takeaway for everybody today. The thing that I've always found really interesting is that, and I did this at one of the economic forecasts, I asked people just what their optimism level was. And it was just, it struck me so much that how people feel is almost as important as, and in some cases even more important than what's actually happening at some points. And the reason we're doing this podcast and the reason we're trying to do this is we're trying to provide a feedback mechanism so we can be talking about it so people can react and try to make change. The economy is not happening in a vacuum, and that's part of the reason why we're hoping to do this podcast. So we appreciate you giving us your time today as well. And I want to give you a big thank you for giving us a little bit of a look ahead of the curve and at what's been going on. If you enjoyed today's show, please like and subscribe. And tell your colleagues. Like I said, I firmly believe we're stronger as a community when more people have better information so they can make better decisions for their business. That's what makes your business better and ultimately the community stronger. Thanks for watching today, and hope you have a great afternoon.